Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're broadcasting from Davos, Switzerland today. And if you believe that, I still have 2 shares of the Brooklyn Bridge for sale. I can't believe how those guys can put on those boondoggles because, boy, that is one expensive place. Folks, I don't know if you know this or not, but I believe a Big Mac in Switzerland runs about $16. That's just for the sandwich. My son-in-law goes there several times a year to Zurich for medical meetings, and he told me, he said, it's unbelievable, the costs over there. Last time I was in Switzerland, which was 20 years ago, it was expensive, but now I imagine it's completely off the wall. So, yeah, well, anyway, let's take a look at the DAX index. We were expecting to have a pretty good rally. We had that pullback, and of course we did. We went up and made another leg higher. But the one that still looks really interesting to us is this FTSE that we've been following for quite some time. It is really, lagging quite badly. It's quite interesting. So anyway, keep an eye on this one because you can see there's a small ABCD there that could come down to the old high around 7,600, which would be really strong support in the FTSE index. Now, the FTSE index, for those of you that are new, realize that is the London version of the Dow Jones Industrial Average. So we'll keep watching like we do every day, folks. Tom just was talking about the U.S. dollar, and this is really getting to be a big leg down. Remember, we were talking about this, just a couple of weeks ago when we were at that 91.20 level. Then if we were to break below that, that told us that we were most probably going to have a huge move, in the dollar index, and that is what we're having. I want to bring this to your attention on an updated version. It doesn't have today's prices in it because it's still too early, but we're now trading at around 89.20, so we're quite a bit below the 1.618 level. And we're actually below that ABCD target that we had there. So this is telling you that you're starting to accelerate to the downside. And if you look at last week's newsletter, you'll see that the weekly cycle on this takes it, way down into the high 70s. So this is really a strong bear market that we've got going on here, which means you're having a strong, bull market in the euro. And that's, pretty much what's happening. We're trading at we got above 123.60 in the euro last night, and it looks like we're going to be going a great deal higher. Even the Australian dollar, let's just put the Australian dollar up here because that's one that we've been very bullish on. Folks, just remember, just a few weeks ago, we were trading at 75.10, which was that big ABCD pattern that, formed the Gartley, and it's just been a really big move up, and you like to see some of those sometimes, but it's acting, quite well. And with the increase in the price of the foreign currencies means drop of the dollar, it means all commodities most probably are going to be lifted because it's going to be very hard for us to, put everything that we have on sale. So that's, watch that because, we're starting to see acceleration now in silver and gold. Let's just put the gold up because we always talk about gold here. And this is from our good friend Mr. Z, alerted us to these patterns just the other day when we were on the air on Monday. And if you'll see here, this is nothing more than a 4-hour chart in gold. And you'll notice here that back on the 18th, we made a 61% retracement. Those moves between the 5th and the 9th and between the 14th and the 18th were nearly equal. They were about $20 each, and now we have an ABCD three drive to a top pattern, possibly occurring at 1357. So that should complete that, and then we'll look for another retracement. But we haven't had a major reaction here in gold for quite some time. It's just been incredibly bullish, which makes it, very, very, very nice to look at. Now, if you take a look at silver yesterday, and I think Mr. Z in the room was talking about this, the fact that the silver came right down to a 382 retracement at the 1675 per ounce, and now I just updated it. It's trading above 1740 right now. That means we're going to go another dollar higher in silver, most probably up to around 1860 per ounce. So these markets are really, really starting to move. And you'll notice that head and shoulders pattern that we have marked there from December, July, and December. That's a beautiful head and shoulders pattern because it fits all the parameters. Your left shoulder and your right shoulder at the same price. Your head is at 1.27 expansion on the left side, 78.6% retracement on the right side. And so that tells you that we're going to go a great deal higher, most probably above $19 without too much trouble. And as the dollar gets weaker and weaker, it makes commodities over here, giveaway prices, like corn and beans and all the other stuff we're looking at. It's just really, really something to look at. Someone also mentioned about the cattle that we talked about 6 or 7 days ago with our good friend Rich Anderson from Anderson Capital Management. Cattle have now went 6 days, and we're up over 6 points. 6 points is well over $2,500 in cattle in just a matter of a few days, 6 trading days. So that has certainly been a very, very bullish pattern. And it seems, let's see if we can get this up here. This is where we were trading as of Friday, and we'll just get this, put February cattle up because we'll get this. Well, that doesn't even work anymore because Feb is going to be coming into delivery. But we'll look at the April, I believe, because we are now, we're trading above 124. I don't have the chart. Sorry, folks. But we're trading, it was a buy at 117.50, and now it's at 124.50. So that's well over 6 cents. And so it should be, some type of resistance coming in here, but probably the easiest way to do it would be to put a trailing stop. And a trailing stop, the best way to handle it is put it under the previous day's low. And that way, as long as it's not taking out new lows, you're going to go, considerably higher, I would think. So that's what I would be doing. The second half of the show today, right after the big break, I'm going to have a special segment about Roy Longstreet and the 135 pattern. It's interesting that Roy passed away in one of my favorite places on this planet, and that's Longboat Key, Florida, back in, I think it was 2003 or something like that. And he was 91 or something like that. His son had passed away. Bill, who I was very close to, had passed away quite a few years, about 10 years earlier. And so Roy was not in the best of health, but he was still okay for 92. But he was a very, very nice man. I first met him in 1965 in Los Angeles, California, when Jim Twentyman was a broker there at Clayton Commodities. Clayton Commodities is named after Clayton, Missouri. That's where Roy was from, and that's where he had Ranch Royale, which was a really nice mini cattle ranch, and it's more or less a dude ranch, but really a cool place. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Down on Longboat Key, where the island sand meets the Gulf Stream breeze. Down on Longboat Key, she spends her life in a dream on Longboat Key.
Okay, looking good, Billy Ray, feeling good down on Longboat Key, one of the most beautiful places on God's green earth. All right, folks, let's take a look here at a couple of these markets that are really looking interesting. We've already looked at the gold market. It's really starting to move pretty good. The real key here is this dollar index, because it is broken down, really badly. And if you'll take a look at the weekly chart that was in the newsletter last week, you'll see that this has a long way to go to the downside, and that means the euro has a long way to go on the upside. What's interesting is they're talking about the British pound today. I wanted to point this out to you because it's very, very important here. This British pound breaking above the 61% retracement level. This is the long-term daily. And we've gone through the 1.618 expansion, and we're going to be looking at the 78 level up around the 143 level. The reason for this is the fact that they are talking about the possibility of renegotiating the Brexit vote. That would really be, to me, not very democratic, but no one ever listens to me. But that's one of the things they're saying, is that they might just repeal Brexit with another referendum. I don't know if that's going to happen or not, but boy, that's something that's pretty serious. So we'll wait and see. But this dollar index and these currencies are really starting to move, and that's the real beauty of it. We've been rather bullish on the British pound, for quite some time. And last night, you'll notice here that we had a beautiful yesterday. In fact, I sent this out a little bit later in the morning yesterday, that we had made a really nice 61% retracement down there at that 39.20 level, and then we went up to the 1.618 level with a really strong bar. And I was chatting with someone in the UK around that time. It was around 2 this morning, and in Tucson time. And he was saying, well, I think I want to give it a shot up here at 140.90 for a short. And I said, pay a little attention to that big wide-ranging bar, because if it gets above that by very much, it's off to the races. And it went through there like melted butter. It didn't even stop. and we went all the way up, and we're trading around 140, 180 right now. There's a perfect example of how long-ranging bars will, keep you out of some trouble. So remember that. Long-ranging bars are danger signs. You should wait until that bar stops going up, at least wait to see for a few dojis, something like that, or a hanging man, or, some type of a pattern. Well, it wouldn't be a hanging man. It would be a, what do they call that thing? I can't remember the reverse of the hanging man. Somebody help me out with that one. My mind is in the gray matter area that is undeveloped. Shooting star. Thank you very much. Okay, anyway, those are the two that I would look at in order to, if you wanted to put on a short. But the problem is that there's nothing there to give you anything at all. What you're looking for is multiple things coming together that allows you to reduce your risk, as small as possible. And that's the real beauty of, pattern recognition and swing trading, is you've got to, control that risk, as best you can. So we'll see. Someone's asked a question, would I be willing to short the gold at 13.58? Yes, I would. The reason why is that's the 1.618 level. It's a 3 drive to a top. There's no wide-ranging bar up here on that 4-hour chart. So I would say, yes, you don't have to risk more than $5 or even less. So that's one thing that I am looking at in the gold is 1350, but believe me, it's 1358, but it is not going to be a easy trade, because it's a very strong day, and the best way to do that is let it to at least stop going up at 1358, at least for a bar or two, and then you'll be able to do it. That's what you're doing when you're looking at short-term trading. You're trying to see how it handles certain levels, and that's what gives you the edge that you need. But you've got several numbers there. You've got a nice pattern on the 4-hour chart. That's a beautiful 3 drive to a top pattern. There's no question about that. It fits everything that you could look for. Let's just put this up here, because then I want to show you something that because these patterns, they appear everywhere. There's a 3 drive to a top pattern in the gold. If you remember the crude oil going back in June, this is the daily chart in crude oil. Nobody wanted to buy it, at $42, and now it's $63, almost $65 today. So, these patterns do work, but they don't work all the time. And the key there is to make sure that you always use a stop, and that's looking at. I rather trade gold, David. I rather trade gold on the medium term and sometime longer term. When you're down there at that 1238 level, where we had that 3 drive to a bottom pattern and 4 ratios, that was the, we talked about that, quite a bit. I'll put this up here so you folks can see it. But those are the ones that you really like to see. This is one in the gold. You'll just see the daily here, where we had the 3 drive to a bottom area at 1238. You were at the 78% level of the low from July, and you were at the 50% level from the low in December. So you had a whole lot of things. You had 4 ratios at the 1242 level. You had 50% of the December low, 78.6 of the July low, and 2 1.618 expansions when you made the 3 drive pattern. That's mother God and country stuff. And now you can see that we are almost at a double top here. The old high here was at 1360, and our ABCD pattern that we just posted comes in at around 1358. So that's another one that you want to, sort of watch. But frankly, I like shorter-term trading in gold for 2 reasons. One, the swings are so good. You get $1,000 a day easy in the gold, usually every day. You don't get anywhere near that in the S&P. We haven't seen a $20 move in the S&P. Well, we had one this week, but it's been very, very minimal. But they've been going straight up, so there's a big difference. And I'm not looking. Those straight up markets are they're great to trade if you get in right, but those only happen about 10 or 15% of the time. So it's pretty tough to get on board some of those things unless you're focusing. And believe me, you can't focus on everything. I look at about 20 different vehicles, and of those 20, I try to come up with about 5 good ideas. And so, we'll keep talking about it as we go through these little sessions each day. But the easy ones are the ones like the gold, when you get everything lined up together, and then you know exactly where you are. And that's pretty much what you'd be looking to do. We're talking about I heard Tom talking about the dollar yen. That thing has really shattered the old level, and we're moving the yen is moving dramatically higher. So lower if you're looking at the reverse of it, but it's certainly got some legs to the downside, much like the dollar index. All of those are certainly related. In fact, every currency is hammering the U.S. dollar. So we're putting the United States on sale. As the president goes into Davos, what will happen there, who knows? But he's going into the den of thieves over there, folks. All these folks are just about the antithesis of what he believes in. So I don't know what his speech is going to be like, but it's going to be interesting because there are some people there that are not big fans of his. So we'll see. Take a break here, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I'm going to do a little special thing here. Our good friend Rich Anderson sent me on a little pamphlet that we've had for many, many years about Roy Longstreet, and it's about these. He wrote a book called The Viewpoints of a Commodity Trader, plus he wrote some pamphlets because he was, educating commodity people about the commodity markets. I first met him in 1965. There's only two places you could really trade commodities in Los Angeles back in those days. One was a little place in downtown, which is too hard to get to, but there was a place right there at the corner of Wilshire Boulevard and Santa Monica Boulevard, which was the Brentwood Boulevard, which was right by UCLA. It was the Howard Hughes building, and that's where the Clayton office was. That's where Jim Twentyman was a broker, and the manager of that was Roy Fassel. And then Clayton was later sold to Conti Commodity, and Roy and Jim and all the other guys moved across the street to one of the biggest buildings in Los Angeles, the 20-store McCulloch Oil Building. And that's where they used to do all the filming for the movies, Banachek. Oh my gosh, they did so many segments there. It was amazing. There was always a filming there almost all the time. And that's where Jim met Margot Grant, who ran a catering service for the movie business. And it was, she did all that stuff. They did the Rockford Files, and just absolute lot of fun. Anyway, after Jim and I went to Drexel, I went to Drexel first, and then Jim followed me a few years later. And we did that, Margot got the Mike Milken account, which they fed the second, third, and fourth floors of the Drexel Burnham building, because those guys worked from like 5 in the morning till 8 or 10 o'clock at night. And they fed them breakfast, lunch, and dinner. And so it was a really good business for her. A lot of fun, old memories. But anyway, Roy did this wonderful thing about, commodities and trading and everything. And the number one thing that he talked about, by the way, those of you that get my newsletter, and I will be sending this out under special cover so you can have it because it's fun to read. This is more than 60 years old, but it's still true to this day. And he was one of the really great traders. He only traded soybean meal, and soybean oil, wheat, and corn. That's all he traded. He didn't trade cattle, and he never varied from that either. Up until the time, I think he traded well into early 1990, because he was still trading at that time. And so he kept his, coins close to the vest, and he knew what to do in those markets, and that's what he really did. But the one thing that you have to focus on, and what Mark Douglas always talked about, is self-knowledge, and that's really important. If you remember the quote from Lao Tse, is if you know your enemy, you are strong, but if you know yourself, you are omnipotent. And that's what you really have to do, is to understand that most important cycle of all, which is that 9-inch cycle from your left ear to the right ear. Because you get that cycle right, the rest of it, is really quite interesting. So just remember these things. That number 2 was self-control, about mastering emotions, and that's very, very important. You can't get mad at the markets and do revenge trading, And the number 3 is accept commodity trading for what it is. Commodity trading is a contest, he said. Skill counts, knowledge is necessary, but is not sufficient. Courage, too, is needed. Commodity trading is high-risk speculation. It is possible to be right 7 times out of 10 and be wrong on the next 3, and disaster is hit. It is possible to make a great fortune quickly. It is also possible to lose it all quickly. The one thing in commodity trading is war, and the victor gets the spoils. So you got to keep that in mind. You got to prepare yourself for this, because you're going to have good times and bad times as you go through these things. Number 4 is try to find the really big moves, and that's really difficult. We were lucky in the gold this December when we had that real big cycle coming in on that big day that Norm Winsky talked about, December 11th. It bottomed on the next day. So those are the ones that you look for that are really great. But, the swing trades are a lot of fun too. That's the one that, can pay your bills until you catch some of the big ones. But when you plan a big one, it's not easy to stick to it, but you got to be able to do it. Number 5, which was very important, and that is to face the facts. And he said, here's one of my favorite, is substituting hope for fact is a great gamble. It leads to wishful thinking. Bias is the greatest pitfall to a trader. One sees things he wants to see, sometimes when they are not there. And that's why I use that motto, trade what you see and not what you believe or read or, hear. I mean, look what the charts are telling you. The charts are there. The bar charts are there. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's the bottom line, and that's really what you really need to know. And but anyway, this is a really interesting one. That was number 5. Number 6. Let's just get number 6 is not being afraid to act. You know, you've got to be able to find something that you think, and you cannot hesitate when you find the position that you need. If you do your work properly and plan the trades and look at the patterns that you're looking for and put everything together, that's really all you need to know. A perfect example of this is this gold today, potentially here at the 1358 level. That's going to be, in my opinion, it's going to be a place where gold is going to offer some and believe me, folks, I'm very friendly to gold longer term, but for a short term, this is exactly what you look for. This is it's a beautiful pattern, but it might not work. But by acting, I have to act because if you're able to see these numbers and you know what your risk is and you know what your profit potential is, that's really what you're looking for. So keep in mind that you have to act when you see everything together, and you have to take the responsibility for that act. There's no one else that's going to do this. You like Jim Twentyman says, defy human nature. Do the work yourself, and once you do that, you're the one that gets the reward. So that's the main thing, is the one thing. And remember, procrastination is your enemy. You don't want to procrastinate. You wait a little bit too long, and all of a sudden prices are $400 or $500 or $1,000 away from where you want to be, and you've lost that opportunity. So these things are just extremely important, and you want to be able to, keep them close to your vest, but have them in your, in your quiver for your bows and arrows, so you'll get your shots off correctly. But you got to be able to act when the time is right. There's absolutely no question about it. And the number 7, which is incredibly important, of course, is the acting for the money management. That money management, he refers to it as his army, and you have to be able to manage it if you don't manage the money's going to manage you. And make sure that this is the object is to make more money. You just don't want to trade for trading purposes. It's very, very important. If you'll remember, in the Jesse Livermore book, when they talked about margin calls, you should never answer a margin call. And if you have several positions on and you have a margin call and you have to take a position off, take the position off that is either losing the most. That's the best thing to do. You wouldn't be having a margin call if the position was working. So you take the ones that are losing. If you got 2 positions on, the winner and the loser, what most people do is they take the winner off thinking that's going to pay for the loser, and that's not the case. You want to take the loser off first and keep the winner. Okay, we'll be right back, folks, to talk a little bit more.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we're going to take a look at Bitcoin. I'm going to be doing a seminar in Hong Kong in late March. Like every year, I go there in March because we have so many students there that ask me to come back, and we spend a whole day, reviewing charts and looking at possibilities of future moves and stuff. We have a great time and meet a lot of friends, and of course, Sarah has relatives there, and it's really nice because some of the students that I have in the United States vacation over there during that time, so we get to meet them, and it becomes really a nice little group. But anyway, we're looking at this Bitcoin chart, and the real key here to me is the fact that it fits so beautifully technically. If you look at the top up there, you can see the BDA. That's a 3 drive to a top pattern, just absolutely perfect. The market comes down, stops at the 78% level, goes up and makes a Gartley at the 61% retracement, come down, makes a Gartley at the 78% retracement, goes up and makes a Gartley at the 61 and 78% retracement, and then it makes the big ABCD down to the 9,200 level. I believe we still got a chance to make the larger ABCD expansion below 8,000, but we need to get it below 9,500 for that to happen. The last 2 days, we've stopped right at the $10,000 a share level. Gosh, just saying that is shocking, considering this thing came out at 6 cents. Whew, what a return. Anyway, that was right at a 78% level twice. It closed at around 10,800. I don't know where it's trading right now, but it's still got a chance for a little bit more of a rally. And if this is a really major move up, we should start any time now, but I'm still skeptical. I believe we're still heading down to below the 8,000 level to get a pretty good shakeout. And we could go all the way down to 5,000 or even 4,000, and it could still be very good because, remember, this is such a big move that it gets accentuated. We had that big ABCD pattern that was real easy to see, at the almost 20,000 level. That's when we first started, trading futures. And we only have less than 1,600 open interest at the CME in Bitcoin. In fact, yesterday it dropped again, and we're dropping open interest in the stock indices too. So this is short covering that's going on, but that could last for a very long time. So who knows? But keep an eye on this Bitcoin because it's going to be around for some time, probably along with some other stocks related to blockchain, and then also for cryptocurrencies too. So we'll see if that's going to be what's going. Anyway, we'll see what's going on. But the market's very strong again. We're look at the euros running here. It's up to 123. We're going to break 124 in the euro. We're almost at 140. Well, we hit 140. Almost hit 142 in the British pound. That's very close to that 143.50, which is 78% level. So that's going to be a real interesting one to look at. The gold has been as high as 1354. We're watching it very closely at that 1358 level. That's the 1.618 expansion. Boys and girls, we've been talking about the bearishness in the notes and bonds, and it's just getting worse and worse each day. Yesterday we had a very minor ABCD pattern, lasted for just about, just a tiny bit above the 382 level, and it was a really nice ABCD. I'll post it in here so you guys can see it, but it was very, very short-lived ABCD pattern, and now we're breaking down below those lows. Folks, interest rates are going higher. That is totally contra to what should be going on in the U.S. dollar, folks. If our interest rates are going higher, people should be wanting to buy U.S. dollars to lock in higher interest rates. So there's something different in this picture this time. So that's usually what happens, but, many times these markets will act differently for, reasons that are not apparent. So trade what you see, not what you think or believe. But interest rates are going higher. There's no denying that. We've seen these long-term charts on these notes and bonds, and we've been talking about it, for quite some time. And now we're just accelerating to the downside after a very minor 2-day correction. And we're below there. We're below that expansion in the notes already. So this tells you that rates are going higher, but economically, you stop and think, if our rates are going higher, people will want to lock in, better interest rates. And so they would convert their lira or pounds and stuff into U.S. dollars in order to buy treasury bonds and treasury notes. But that's not happening. So maybe there's something big going on out there to see if it's going to happen. Yes, Bob, I can see you got out of your gold at 1353. I agree with that. And there's several reasons. You're only $3.50 from the big at 1.618 expansion, and maybe it doesn't make it. I wouldn't risk it for that last $3.50. So and I would look for a correction after that of at least $20, but whether we get it or not, we'll see. I'm talking about the question on the peak on the rates are all going higher. Long rates, short-term rates, intermediate rates, they're all going higher. If you remember 2 weeks ago, the LIBOR, the London Interbank overnight rate, was up 20 days in a row. Interest rates had went 20 days in a row up, and now they started to accelerate even more. So rates are going higher. That's the bottom end. Now, whether inflation comes in or not, who knows? Because, commodity prices are relatively low with the exception of a few things like copper and gold and silver and crude oil. But the grains are, they're very close to the cost of production. So there's, big things happening in these markets that I think are pretty important to, to pay attention to. And someone's asked a question about the top in the stock market. My answer to that is ask someone who knows, because I have no clue. I had a really nice position in the IWM that I, was working pretty good. I put the stop at break even, and in one day, the market's strong enough to take you out. I just wait to see the next one. That's all I can do. I don't see any patterns here at all. The only thing that I see is there's a small pattern in the Dow Jones. Let me see if I can find the darn thing. Maybe not. Ah, shucks. I can't find it now. Anyway, there's a small pattern there, and then on the S&P, there's a really strong 1.618 resistance at the 1251 level. I don't know how high that's been. It might be through it. No, we've been to 1250 and change, but at 1251, actually, yeah, it hit it exactly. 1250.25 was the 1.618 expansion over the last 2 days, but we're only trading at 28.47, so there's not really much, happening at that point. The real thing to watch here are these currencies, because we're having tremendous moves, and that means a great deal, because once it starts, they usually don't turn on a dime, and we'll see. The yen is strengthening, the pound is strengthening, the euro is strengthening, the Australian dollar is strengthening, so it's telling us that this U.S. dollar index is going to break 89. It probably has broke 89 already. I don't know, because when Tom came on his show, it was at 89, 29. So we're probably below 80. Yeah, we're probably below 89 right now, I would believe, with the euro at 123.90. We'll be right back. 877-927-6648.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey, we're back, folks, and I just got a special email from my good friend Arch Crawford of Crawford Perspectives. I've posted it into the room here, and it's basically, you can see that there's something really big happening here on July the 25th, so I'm going to try to have Arch on tomorrow to discuss this. This is the type of stuff that W.D. Gann worked on, and also Evangeline Adams. It's things that also Norm Winsky has, and of course he's posted some things for tomorrow also. So we'll try to have Arch on to give us a good chance, and we're going to have Norm on next week too, because I think we're going to have him on Tuesday the 30th. That's the day before we have this lunar eclipse and full moon, so that'll be very interesting, to follow. So we'll look at it pretty good. The other thing is next week Steve Rhodes is going to have a webinar. Those of you that are interested in technical analysis, he does a fabulous job. And I think if you really have an interest in that, that's something that you'll get a lot out of. So keep an eye. Go to www.tfnn and research it there, and you'll be see it. I believe it's a week from today. So keep an eye on it. But we will try to have Arch on tomorrow as our guest, and we'll see what's going on. So we'll keep an eye here on the gold here at 1358. We'll discuss that tomorrow and see how that runs. We will be watching the dollar. We will be watching that dollar index very, very closely. And also, we need to watch the crude oil, because if we close above $65 a barrel in crude oil, that's going to be a very, very positive sign. So far, we've been to 64.90, but with this currencies getting hit like this to the upside, this should make crude oil very, very strong, because you're going to be buying, our gasoline a whole lot cheaper. We just hit 1355 in the gold, so we're getting closer and closer there. And we just went above 142 in the British pound. We're looking at 143.50 in that. That's another 150 pips away. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!